All right, welcome to another installment of the Life Happens podcast with your hosts Ryan Dotson, Shawnee Mack. Sean, welcome. Congratulations on the YouTube and iTunes fame with the launch of the podcast. Special thank
Yes.
you to our viewers and listeners for what was such a successful launch. Kind of took me by surprise, to be honest.
Yeah, I was really happy with it. So really appreciate everybody who took the time to give us a watch, give us a listen. Really appreciate you guys. So we're
Yeah,
having fun. I hope you guys enjoyed it.
yeah. Some of the feedback has been really, really positive. Some's been um, really helpful in different topics, different ways to approach the like how we have our discussions. So we'll implement all those, um, throughout the process of really figuring out what this show is. Um, so a lot to talk about today. Let's get right into it. It's totally appropriate that right before or right after our launch, um, GameStop has decided it's going to take off once again. I know that we recorded almost like a pilot episode first time around that was mainly focused on that, and then it kind of didn't seem topical, only for it to circle all the way back. And now the stock is once again in the air. So for those that kind of lived under a rock or of just jumping into this region of not talked about topics, uh, basically GameStop is one of those brick and mortar locations you all remember them from when you were a teenager, or even just growing up playing video games. You actually had to go and get a hard copy of the game rather than just downloading it online, and that's where GameStop came in. So basically, they're a public company. They're bas- basically obsolete at this point. Just no need for them to
Yeah.
be around anymore. And so they saw the writing on the wall. Specifically, specific investors, a group called Melvin Capital, a hedge fund, um, decided that they were going to try to take advantage of the downfall of GameStop in that they were going to short the position in order to make a few bucks. Uh, just as like a baseline, Sean, you want to give the listeners kind of like a level set of what shorting a stock is. I know we saw the movie, The Big Short. We've seen it a couple times, but what specifically happens when people are doing that?
Yeah. So when we're talking about big hedge funds and they're shorting stocks, they are going out into the open market, uh, borrowing shares of stock, selling them immediately, hoping that the stock goes down, and then they buy them back at the lower price, uh, pay the person back the amount they owe them, and they pocket the difference. So a hedge fund might go out in the open market. They might borrow 100,000 shares of GameStop stock. They immediately go out and sell it. They take that, $100 million and pocket it. They wait until the share price, goes down by 50%, and then they can buy back the same amount of shares for $5 million. So they pay you back the 100,000 shares that they owed you, and they pocket the difference, which is $5 million. And so that's how big hedge funds kind of short stocks and bet on stocks to go down.
So here's a quick question. It actually just came off the
Yeah.
top of my head. If you're shorting a stock, right? When you're buying those shares from whoever's selling them to you, you obviously know something that they don't because they're going to end up losing money because they sold it to you at a price, they're buying them back at a lower price, or are they just trying to buy the dip and you're capitalizing in that interim?
Yeah, I mean, it's people place different bets, but part of the difference is hedge funds a lot of the times, which is why these guys started getting a little bit of hot water. A lot of the less savory hedge funds will, put on a short position in the morning and immediately put out or pay a journalist to put out some bad PR about the company. It might not be lies, like direct lies, but maybe a misleading story, a bad spin. And so they, sometimes they're just not very ethical. They're hedge funds, they have a bad rap. Some of them are fine, some of them are out to expose fraud, and you kind of need those people in the market. That's all they do is they spend time looking for and exposing actual fraudulent companies. This wasn't one of those hedge funds. These guys were kind of trying to crush stocks, like you said, trying to take advantage of the downside. So
So
that's why they got in some trouble.
I think that's kind of a key point, right? Is that the short position is a position because it is almost like you said a check and balance for fraudulent numbers, right? These companies go up, 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 and then they're obviously kept in check by as one of the ways is shorting the position, knowing that these walls are going to come crumbling down eventually. Not all the way down, but enough to where there's profit to be made. Melvin Capital is not that group. Melvin Capital is exactly like you said. They're allegedly fabricating stories, basically getting that bad
Allegedly.
word out. Right, all alleged. Getting that bad word out, and John Q. Public just wasn't buying it. They were actually buying the stock and intentionally driving that price up. So yeah, just kind of take us through the behavior of. I know Reddit is a site that's brought up. Reddit is basically like they call it the beginning of the internet, right? It's
Yeah,
everywhere.
the front page of the internet.
Every story starts somewhere on Reddit, and yeah, they had an idea. Wall Street Bets (WSB). It was a group of guys in 2019. They saw this. They had mentioned it, kept it on the DL for a while. Chose when they were going to strike. It eventually did, but so kind of take us through like that process, right? So
Yeah.
John Q. Public now finally has the ability and strength in numbers to actually make a difference in the market.
And that's what was crazy, and that was kind of a shock to the system, a literal and figurative shock to the system. It's not something we've seen a lot, where a bunch of small retail investors, with a $2,000 Robinhood account, are able to move markets. But that's what happened. So the Wall Street Bets community, which is a subreddit on Reddit, basically a giant open forum, they decided they were going to figure out what were the most shorted stocks, and they were going to all buy them in hopes to get the stock to go up. So we talked about shorting stock means you go out in the market and you borrow it and you sell it immediately. So in this case, let's say we borrowed GameStop at $10 a share. We only make money if it goes down as the hedge fund.
Mm-hmm.
All the Robinhood traders come in now. They start buying. They create a bunch of buying pressure. The stock starts to go up, and up. And now the hedge fund realizes as the shares hit $20, $30, $50 a share, they need to buy those shares back because they owe them to someone else. So instead of being short, they have to go out in the open market and then buy those shares. They become a buyer. So as all these hedge funds who were short capitulate and they start to change their argument, or they start to change their actions because they have to, they go in the open market and they start buying alongside the Robinhood crowd. That's what creates what's called a short squeeze. And that's how this stock went up something like 1,500% over
It
the
was
course of 6
astronomical.
months.
Yeah, it was insane.
We're talking from $5 to $450, something like that.
Yeah, I think it was something like that. It was sub $5, and it peaked at 480, 486, something like that. Like, just those are numbers you never ever hear of, especially in the time frame of the, like you said, the 6 months, but more importantly in that week leading up to the squeeze. Right now, obviously, when you take a short position, there are specific due dates, and one that was floating around was that Friday, right, the 28th. I think it was something like that. Whether it ended up being true or not, we're not sure, but that seemed to be, when the public gets a fact and they just run with it. That is what happened basically, and this number had gone astronomically high. Everybody's buying. The people losing are still buying because, like you said, they're covering their ass on this other position. John Q. Public sees the opportunity to stick the man.
At this point, it was all over CNBC. It's everywhere on Twitter. It's trending.
Yeah.
It's on every social media platform. And this was a social event, almost a social study as much as it was an economic event. It was really interesting to watch it take hold, and how quickly people can get so ingrained to an idea, so attached to an idea within a week, that this is their savior, buying GameStop and holding forever. This is what's going to do it. And it's
was
kind
a
of
rally
amazing
cry
how quick
on
that happens.
social.
Yeah.
Was,
and so listen,
wild.
I'm with the little guy having power. I think that's really cool. Like we said, we saw what this came to a head as, and this is the big problem that we're going to dive into a little bit, is Robinhood is one of the big trading apps for smaller investors. It's most popular trading app with millennials. And this is where a lot of the trading happens, in this Wall Street Bets crowd that we were talking about, these younger traders.
Just real quick. So it used to be that you would have to go to a bank or a special office, or go and have a suit and sit down with a broker, and that is how you kind of made your trades and stuff like that. Robinhood is an app where you don't need hundreds of thousands of dollars, tens of thousands of dollars. It's just a couple $100 or whatever, and you're able to make these buys and sales and have a little portfolio for yourself.
And that's exactly what they did. There's plenty of other investment apps out there. Robinhood's user interface was like very, very clearly aimed at a younger demographic, and that's fine. There's nothing wrong with that.
His name Robinhood.
Yeah, in theory only. So
Literally.
anyway, what happened was we saw the power of these small time traders, these guys with $1,000 in their account, but power in numbers. There was something like 6 million people on the Reddit, the subreddit or something like that. I'm not entirely sure.
Mm-hmm.
And these guys got the stock to go up so much that the hedge funds were panicking. They were running out in the market. They were buying everything they could. They were panicking. There was no liquidity, meaning there were no sellers in the market. The hedge funds needed to go out and buy hundreds of thousands of shares that no one was willing to sell at that moment in time. That's when something goes illiquid. It means there's basically no price for it, because if there's no willing sellers, you can't put a price target on it.
Solid, if you will.
And at that point, the system kind of breaks. And that's what we saw happen. In the background, there were so the stock, like we said, it peaked. If you look at the stock chart, it peaked around 450, 480. It might have touched 510, something like that. But there's a few people in the background who had orders filled. So you can set limit orders, meaning I will only sell at this price. They had orders filled at like $1,500 a share. That doesn't show on the radar anywhere, but the system was literally breaking in the background. And this has come out now that it's been weeks since the event actually
Right.
occurred.
Yeah. Now the dust is settled and we can kind of see the details and stuff.
And so what happened was, pretty much twofold. Robinhood didn't have enough money to pay the people that actually executes the trades that Robinhood takes, right? So they take your money, they let you buy stock in the app, but on the back end, they have to actually go get that stock from someone else. They don't have a bunch of stock sitting around. So they didn't have enough money for all the buying coming in to pay for the orders to their broker. And on top of that, the hedge funds were freaking out because they couldn't cover and they couldn't buy the shares they needed. And everybody just kind of panicked. And in that moment of panic, Robinhood and the CEO, Vlad, decided the best thing to do would be to shut down all buying of shares in the app. Of GameStop shares. You could continue to sell. You could openly sell. So they turned everyone that would not sell into a seller. Remember, we were saying there was no market because no one was willing to sell. That was suddenly your only option.
It's literally bitch slapping the public in the face, because while they did decide to do, whoever decided to do it, right? So Melvin Capital is the one who is, without a chair in the game of musical chairs, right? So music stops. Everyone on Robinhood, the public, all grabs their chairs, and Melvin is left sitting there to the tune of about $3 billion, right? They get not bailed out. They get covered by Citadel, Steve Cohen. I'm sure you've heard the name, owner of the Mets. His company invests in Melvin Capital to basically save them from themselves, because otherwise they basically would have gone under. And Robinhood, who was seemingly now in their own jam in regards to liquidity and things like that, not having the stockpile to fill these purchase orders, and desperately needing to I don't want to say force, because force is illegal, to force sales of these stocks.
Yeah, this was the volume traded of these stocks in that week that we're talking about was otherworldly. And, part of it is it's an event that we haven't really seen before. This many retail buyers coming in this kind of fashion through a broker like Robinhood, who is not the safest broker out there, right? They're pretty known for not being very highly regarded in the investment community. Let me put it politely.
And that was before this.
Yeah, and so, but the biggest issue, that comes out now afterwards, right? Robinhood's CEO Vlad comes on CNBC, and we talked about this on the side.
Like, he's such a douchebag. He's just your grade A asshole. Like, and you see him on TV, you already hate him. So it's like
he straight up lied, and that just proves your point. He came on CNBC, and they kind of grilled him a little bit, as far as CNBC goes.
I was happy with their interview, to be honest.
Yeah. And they're like, so what's going on? Like, was this a liquidity issue? You said no. It's a liquidity issue again. It's just meaning they don't have enough money to cover the things that they should,
Because there are
or the
certain
orders that are
processes
coming in.
that they have to go through, right? I know the clearinghouses and all that shit.
Yeah, so like normally, everyone has a credit limit. Their credit limit got got raised a little bit, right? Or I guess technically it would have gone down. They were not allowed to borrow as much cash. They needed more collateral, and
Right.
that was kind of their issue. And so, but then that means you don't have enough cash. You can't go on TV and say this was not a liquidity issue. And he did that multiple times in a row, and then turned around the next day and raised multiple billions of dollars in liquidity.
Because he had
Um,
a liquidity issue.
and that's normally where the SEC, the Securities and Exchange Commission, should step in. That's their job. The problem is they don't. There is no police and regulation of the markets as there should be. Like a CEO of a company is not supposed to be able to come on TV, lie to you about the cash situation at the company, and then get caught and continue their job as CEO. That's not how it's supposed to
With
work.
no repercussion whatsoever, more or
Yeah,
less.
and
Their
there
IPO
have
got
been
pushed back. That's about it.
there have been a few CEOs that have done this now, and they don't. Nothing happens.
Can you think
Um,
of anything that's more blatant and in the public's face that I honestly can't really think of anything. Like it was so, but we watched it happen, right? Because now the people that have the Robin Hoods, the people that did this, bought into this with their hard-earned money, were shut out all the while, and only allowed to sell all the while behind the scenes. These guys with direct access to the markets are snatching up every little share that trickles in from somebody who had to give up their position or did give up their position.
yeah, because keep in mind this is just Robinhood, right? But your shares only exist on Robinhood at that point in
The
time.
whole
You can't
market did not shut
access,
down. Just
yeah,
that.
you can't access them anywhere else. So you might have 50 shares of GameStop, and to you, if you bought at $200 a share, that's worth a decent chunk of change.
Hmm.
But you can't access them anywhere else other than Robinhood. So that's your only option. If they don't give you access, that's it.
Yeah,
Um,
you're completely locked
and
out,
so,
and
but the
now
rest of the market can do what they want. So
you're seeing the share. You're seeing the share because people get scared. There is like that's I feel like that's a lot of it too is general perception of a stock. I mean,
oh yeah,
in the day to day, that almost takes over more than the actual statistics themselves because you see the stock dropping. You have a point in your mind where you can't go any lower. Now you have to sell your position, and all the while, the guy who bought in at 200, it's now back down to 80, 50, whatever. You're
yeah.
shit out of luck. The term "hold the bag." They're left holding the bag. Essentially, is that guy.
Yeah, and it sucks because it's always the little guy. It's always the person who gets in last, who hears about it latest, who's just everyone's trying to get rich quick. Let's be honest, that's why people buy into these things without knowing anything about it. So no one's innocent here.
Mm-hmm.
But it is always
100%.
the little guy at the end of the day, the last person in who's left holding the proverbial bag.
Yeah, you're not you're either going in for one of two reasons, and neither of them is trying to save GameStop. You're not an avid GameStop like Premium Plus member. It's you want to get rich quick, or you want to screw over the guys who have been screwing you over the whole time, right? But you're still screwing somebody. So while no one's innocent at the end of the day, it does feel like it's the same people that are kind of getting hosed. Now, regarding I mean, there's so much going on in the world right now that it kind of was a blip, right? It was popular for a week.
This should have been something that
This should
cost
have
him his
been
job.
massive.
It should have been a huge deal. I can't believe how quickly it's kind of blown over.
It should have required an entire overhaul on how you can operate an exchange. An exchange. That's basically what it is. It's an exchange platform. Like that should be completely reviewed. You shouldn't have the ability to do that.
Or at least their cash positions, their balance sheets should be reviewed. Robinhood
Oh yeah.
specifically.
Oh yeah.
Maybe there's something not right under the hood. So maybe somebody checks that out. But again, if the SEC was doing their job, that's what they would be doing.
Yeah.
He wouldn't be allowed. And I don't know why they don't. I really don't. I think part of it is just the stock market is pretty much all people have to cling to these days, right? Like You just like when
Yeah, there's
Trump was
no.
in office, you just point to the stock market all the time. Like deep down, the economy is not all that healthy, but the stock market's doing great. So
Yeah, that was Trump's biggest you call it saving grace. It's hard to say now, but it was
yeah, well,
jobs, the economy, and jobs. It's like, well, a third of the country's out of work, and the stock market is clearly inflated and completely fake because there's no way that this is happening right now. It doesn't add up. Like it's wild to see. But do you expect any legal ramifications from this? I know that sometimes they do the reviews and things like that, and then it goes from 6 weeks to 6 months, and then at that point, society has just kept it going, and then you see something what was full column front page news is now a blip on page 18 of like this, that, and the other.
I think that's exactly what happens here. Somebody will form a committee to review it. It'll go on for 2 years, and then you'll read about it on CNBC in 2023, and you'll be like,
Yeah,
"Oh yeah, they
some
got a
sort of
$500,000
investigation.
fine for
Yeah.
all that fraud." That's what I see happening. Who knows? Maybe I'm
Which at the end
surprised,
of the
but
day,
I
that
doubt it.
is the term that you would use, right? Was fraud.
Yeah. So a lot of people really, really love to praise Elon Musk. A lot of people don't know he did the exact same thing.
Oh yeah.
He came out. He came out on Twitter. He said he had quote funding secured at $420 a share when Tesla was at like $300 a share. So Tesla immediately went to $420 a share because he has funding secured to buy the whole company out at 420, and he did not.
He's done that.
And
He's done
that's
it not that egregious, but he's done that a couple times.
yeah, but this was outright blatant securities fraud that should have got him removed from CEO and the board. He's
Yeah.
now the richest man in the world. That's a different topic for another day. But just to prove, they've been letting this stuff go on. They've been letting these guys get away with it for a while. This happened back when I'm saying now, in I think 2014,
Mm-hmm.
2015 maybe. I could have the exact year wrong, but it's been going on, and it's part of the reason, like Ryan said, the market is so inflated because if fraud is allowed to exist, it's gonna exist. It's gonna happen.
So we've got about 3 or 4 minutes here left. Quick question for you.
Yeah.
Do you think? I mean, it's obvious now, right? That the social influence, right? The the speed at which information is exchanged and consumed was a major player in what happened with Robinhood and with GameStop and things like that. Because if you tell that story, it sounds asinine. It was literally thought to be impossible prior to it happening, and I equate a lot of that to um, people just consuming information at an astronomical rate, right? Do you see that kind of playing a bigger role going forward? I know regulation and all that shit's not going to happen, but kind of society kind of policing itself, really.
I think until we get to the point where we can police ourselves better as a society and we don't rely on those, overarching entities to do it, yeah, human emotion is going to exacerbate all of these moves in the market, in our lives in general, but specifically in the stock market. If you take a long-term look at the S&P 500 chart, which is the largest 500 companies in America, chart's been around a long time, so there's great history for you to go back and look. The peak to trough, meaning the top of the market to the bottom of the market when it starts to fall. Thank you. Uh, has just gotten wider over time. Every time we rise a little bit higher and we fall a little bit farther, and the declines are more rapid and more aggressive than they have ever been in the past. And so
That's
are the
interesting.
rallies. So are the rallies out of those declines, though. Some say that's due to central bank actions and printing a bunch of money and throwing it at the market to put a floor in the market. That's one argument. Whatever the argument is, the declines happen more rapidly now, both on the downside and usually coming out of it on the upside. And I think that's only going to get worse, like you said, with information being disseminated, so much faster and
Yeah, it's
quickly.
what
And
what used to happen in 4 to 6 years is happening in 4 quarters, and companies are just getting slammed. But at the same time, like, you know, this stuff used to be hard covered, um, you know, reportings on their companies and stuff like that. And then even digital still was, there was a summary page and that was basically it. But now it is out there. It is for people to consume. and also however they want to interpret the information, right? So the biggest thing with Wall Street was always like this closed door society. Like, we understand what's going on. Don't worry about it over here. Like, everything's cool. But now
Yeah.
everyone is privy to the same info. Everyone knows someone's trying to screw them. But enough people with that false sense of confidence making moves in the market could end up being pretty disastrous. So it'll be interesting to see.
Especially like we saw with this particular moment, like a lot of these people, as you mentioned earlier, were fighting not to get rich, but just to screw the hedge funds, just to screw over the top, the big guys, the top 1%. And so the rallying cry of these guys was the opposite of the Wall Street mantra. Um, there's a saying in Wall Street that's supposed to keep you safe. It says the market can remain irrational longer than you can remain solvent. Basically means the market's going to do whatever it wants to do, and it's not going to worry about what you think it should do, and it's going to make you run out of money before it does what you think it's going to do.
Right, it'll eat you alive before.
Yeah.
Yeah,
And the Reddit mantra was we can remain retarded longer than you can remain solvent. So when
that's
your
awesome.
opponent, when your enemy is not fighting with ration, it's hard to have a
And just sheer
standard
will.
argument.
Yeah,
Yeah. So that's
because
interesting. That's what we're
because
going to
I
see
mean,
more of.
people have like we did say that it was I'm more than willing to part with my $1,000 a lot quicker than you are your millions just to watch you go down because we the public has nothing to lose,
Yep.
and it's also not a big number until you put it all together.
Yep.
But there are people. We say it all the time, right? There's 5% over here and 5% over here. Like, there were guys who that were millionaires that bought into the GameStop thing, and then
Oh
sold their
yeah.
position, made tens of millions, went on TV and said, we got to get these guys. I'm glad they're getting exposed. It's like, you just made a shit ton more money. And then
Yeah.
there's also the other 5% of, people lost their fucking houses, like car payments, mortgages, like all that shit because they thought that this was going to get them up here, and he's the guy watching 250, 200, 150, 100. It's just, but that's the world keeps
Such as
turning.
life. Yeah.
Yeah. Man,
No,
life
but
happens, right?
no, that's and it does, and we're here to talk about it. No, that was a great point though, because there were a lot of multimillionaires who came on Twitter, CNBC, what have you, and called for the same rallying cry. Let's stick it to the man. Let's all buy GameStop. I guarantee you, none of them are still holding GameStop. They rode
None.
that wave. They profited off the little guy just like everyone else did. And like you said, they made their quick millions. In this case, literally in the matter of days, a couple $1 million for these guys, if not tens of million, just off a trade.
Just
Um,
off trade. It's unbelievable. But
yeah,
so yeah, that's that. So we'll see how GameStop comes back. This will air on Tuesday. So we'll see where it stands. But
it's up 100% this week, if I'm not mistaken already. So
I think I saw. Yeah, I think that's why we had brought it up to talk about it again. It was because it was rallying again. But yeah, if it happens again, we'll discuss it further. But that will do it. Follow us on, what is it? The Life Happens
Twitter and
podcast.
Instagram at the
That's
Life
right.
Happens podcast, and also on YouTube. Check us out if you want to come watch us live on YouTube as
How could
well
you not?
at the Life Happens podcast. I know, come join us.
And
Come on.
once again, on iTunes or Spotify. So for you Android people out there as well, free obviously. And please, if you could take 2 seconds, like and subscribe. YouTube, iTunes. It's so big for us, and it takes zero effort or money on your end. So please, like, subscribe, rate 5 stars, whatever. I'm happy to sell out. I have no problem doing it. I will ask you every single time. But